Jérémy Zarka. I'm a core team member of Blockchain HEC. So I'm very honored to be here and to moderate this panel with such a great speakers who introduce themselves. And so I will co-moderate this panel with Benoît Leveux.
Hi, everybody. It's a real pleasure to meet you all.
And so Benoît has set up this Discord, so I think we can all upload him. And he's also in charge of the website. So that's a super cool task. So let's jump directly on the topic of tonight. So we've decided to set up a talk on DeFi. We've all seen the collapse of FTX over the past few months, and so that deserves a bit of attention, I believe. So we have here great speakers, and maybe we can let you introduce yourself. Maybe Naomie, Halioua. So maybe ladies first, you can introduce yourself and tell us what you do in Web3 and a little bit of your background. Yeah.
Okay. Yes. And it's broken. Do you understand me? Yeah. Great. So my name is Naomie. I've just graduated from Polytechnique, so not from HEC, this year. I have a data scientist background, and I'm now a DeFi product manager at Kaiko, which is a leading crypto market data industry for institutional. So previously, I worked as a DeFi researcher at Pirates Lab, which is like a Web3 startup studio. I work on a thesis on deep hedging, so how to hedge a portfolio of crypto derivative with a deep learning method. Besides that, I found Women in Web3, which is a community that aims to empower, to connect, and to educate women in the Web3 space. We are doing in real life events twice a month. We have a newsletter, we have a podcast, and we are supported by big actors in the ecosystem like Sandbox, Avalanche, Tezos, StakeDAO, Morpho, and HEC blockchain tonight also. Yeah, so we gather 600 women at our event since 6 months at the beginning, and the legal advisor Margot is here also to represent the association.
Okay, so thank you, Naomie. Maybe Pierre, you can introduce yourself. Pierre Person. The first time I saw you speaking at the conference, you said you were a young retired.
Yes.
So I think it's if you can introduce yourself and explain what you do in Web3. And
everybody, hello to everybody. I am indeed a young retired from politics. I was a congressman during this 5 years. I work a lot on a Web3 aspect, on the regulatory aspect. I draft all the legal regulatory and framework. French regulatory framework, and I work a lot on the monetary policy because I think it's very important subject, and we do not have in many politics who are speaking about innovation and monetary in French, in the French Parliament. So it was quite my specialization.
Very interesting. So I saw that Julien has just turned off the camera. Maybe Julien, you can introduce yourself also.
Yeah, sorry guys. Yeah, sorry for not being on stage with you. I had to leave Paris this morning early. Yeah, so my name is Julien Bouteloup, the founder and the CEO of Stake Capital that Ilya did a good presentation about. So basically in Stake Capital Group, we have a few different activities, from running a family office to a hedge fund, doing all type of arbitrage, market making type of activities and liquidations. We also run asset management, StakeDAO, with optimizations of portfolio, Blackpool, the NFT hedge fund, where we are leading on Survey, for example, owning Mbappé and all different type of assets. Rect, the underlying dark side of DeFi journalism, and other few different products. I'm also involved in Curve Finance, which is, I guess, now one of the biggest DeFi projects of the ecosystem. So thank you for having me tonight.
Thank you for being here. Thanks a lot. And last but not least, maybe you can, do you want to say another word, Stéphane? Or, yeah.
What I can add to what I said previously is what I do specifically at DNA Partners. I am specialized in corporate structuring, VC and M&A, and I advise a lot of DeFi and DAO projects. So that's why this panel is, I think it's going to be very interesting. And I have our visions from different angles, and I'll try tonight to bring you the legal aspects of things.
Thank you all. So let's now go to the question. The dramatic collapse of FTX and the fall from the grace of the CEO and industry, Darlington, Villain, Sam Bankman-Fried, has sent shockwave reverberating across the crypto world. Beyond commenting the 2022 year, we will explore in this conference how the meltdown of FTX and the resultant 200 billion crypto market wiped out are major wake-up calls for the industry, serving as the catalyst needed to remove the distracting frothiness plaguing the industry and set the stage for refocused, decentralized growth and longer time maturation. We will focus our discussion about the impact of the domino effect, FTX, but we would like to step first and have your opinion about the situation more globally. 2017 was a second rise of cryptos. 2020 was the year of DeFi. 2021 was the year of NFTs. 2022 was the rise of metaverse gaming, we will see. So our first question for the panel is the following. What will you remember of 2022 in the CeFi, DeFi, CBDC and DAO sector of Web3 at macro level, and for your blockchain project, if you were involved in any, how did you react to these different events?
It's a big question.
Yeah, it's a big question.
Do you want me to start?
Yeah,
okay. No, I think FTS, it's not about crypto. It's about CeFi, and it's the failure of the CeFi, of the regulation of the CeFi. I think right now, some exchanges, some big actors of the CeFi in crypto act like a bank, but haven't the same rules as bank. And I think it's very sad for the crypto ecosystem, because there is good actors that we can trust in them, because they believe in the fundamental of DeFi, of crypto, and bad actors like we see with Celsius, like we see with FTX, some actors that doesn't play the game like other players. And I think it's bad for people who invest and have their assets in FTX, but it's bad for crypto in general, because it gives us a bad image. You know, I defend the crypto ecosystem during 5 years. It was very difficult to persuade regulators, politicians, that crypto and not blockchain. I think crypto and blockchain can be dissociated, but crypto is the future of the innovation. It is the future of the web, and in generally, it is a future for our society, because it will transform all the value, all the institution, democratic institution, and have a big change. So right now with FTX, I don't put the same level for Luna and UST, but because of FTX, it's quite difficult to defend crypto ecosystem. When you said to our grandparents that crypto is not a scam, everybody say to you, okay, what can you say right now if it's not a scam? So we have to build a better ecosystem with very strong people who do the great things and right things in order to have a healthy ecosystem during the next cycle. There is a five next years, because it's very difficult to regulators, to politicians who trust, who know that blockchain is very important in order to defend this ecosystem when there is some FTX crash.
Yeah, so your question was like all the year of 2022 and all the domino effects after. So yeah, when we talk about 2022, like in terms of DeFi, CeFi, we like all think about like what happened to Terra Luna and what happened to FTX, which was like the two big events in the crypto ecosystem this year. So they were both like really like shocking events. Like both events share like some common, like both like Terra Luna and FTX project share some common thing. The first thing the share is like both projects were like really like super fast growing project. Like Terra Luna grew from 2 billion to like 16 or 18 billion in just like 6 months, which is like, you know, like enormous. And for FTX, like between 2021 and 2022, they took like 20% of the market share. So they grew from 4% of the market share to 24% of the market share. So both projects were like super disruptive projects, and they both crash. So we can also like ask like if like we're raising a lot of funds and like growing super fast is like the big way to build into the ecosystem. And yeah, the second thing is like in this collab, in crash, there is always like winner and loser. In terms of winner, we can talk about like Binance, which like really spread an image of strength and security, especially like after what they told about like the proof of reserve. So a few days after, like few days or few moments after like FTX crash, they just like show their codes and hot wallet, and they were like followed right after by OKX and crypto.com. So yeah, so Binance is like one of the winner of the crash. And the second winner is like DeFi, because like a lot of actors went from CeFi to DeFi. Uniswap like took like a 13% of the market share within like the last week, which is like also like something like huge. And yeah, for a certain pair, like for example, for the ETH USD pair, so there is like twice more liquidity in Uniswap than in both Binance and Coinbase. And it's the same for the BTC ETH. There is like 3 times more liquidity in Uniswap than in just Binance. So yeah, we have to build like a healthier foundation, and thanks to this true crash, like we can also like show a better future.
Thanks, Naomie. Really interesting point. Maybe Stéphane, you want to continue the discussion?
Yeah, I can continue. 2002 was the collapse of some very big centralized actors, and these trigger the question about regulation. So how do we regulate those centralized actors? And this is also fun to think in terms of centralized actors versus decentralized actors. And 2022 was the year where the European Council adopted the text for MiCA, which still needs to be adopted by the Parliament next year, and then it will come into force. But basically what we can say now is it's going to be a big shock for centralized actors. And if you look at DeFi is included in MiCA. Why? Because you have a small recital saying that MiCA does not apply to decentralized projects. Of course, then comes the discussion, what is decentralization? But let's assume we are in face of a truly decentralized project. It's not covered by MiCA. Then when we go back to MiCA, the question is whether those collapses could have happened should MiCA would have been enforced at the time. So we will never know. But what for sure we will see in the future is that MiCA will be a shock for the industry, a real shock. As lawyers, as jurists, we are not sure whether all players will be able to stand by the level of regulation that will be applicable. And just to give you a few hints of the changes that will happen, launching a token today in France, it's possible. You don't have to ask the authorization to anyone. You can ask a visa, but it is optional. Tomorrow, you will have to notify the regulator to file a legal opinion about the status of and the qualification about the token. You will have to say at the end of the fundraising whether it succeeded or not and how much you raised. You will have to put the funds with a CASP, so crypto asset service provider, or with a credit institution. So you will not be allowed to play with the funds as now. And you will have to deliver a white paper with specific norms that will have to be followed. So first, this is a very big change, and I think not so many people are talking about it. Next, for the secondary market, Nowadays, we have just 4 crypto services that are regulated. Tomorrow, all of them will be regulated. And tomorrow, they will need approval. So this is a way higher standards with prudential requirements. So it is much bigger. It's going to be much more complicated. And what's fun is that with the IMF now, we see that they put at the top of their list the instruction of projects which aim for the approval. So for now, just registration seems not to be enough. And finally, this is the last word. It's about market abuses. For now, there is no regulation about market abuses in cryptos. So basically, the manager of a project, the issuer, they can trade on their own tokens. Tomorrow, this will not be possible anymore. So the market abuse regulation that we have for securities will be applicable to crypto. This is, again, a very, very big change. So I don't think we are prepared for it. We have some time to get prepared. And for DeFi, some people are already talking about MiCA number 2 to address DeFi and to address NFTs. So we'll see how it plays. But maybe the fact that centralized actors will be super regulated will lead to the development of decentralized projects even more.
Thank you, Stéphane, for your point of view. And maybe Julien, you have any word to add?
Sorry. So it was good, pretty good feedback and very good highlight about what happened in 2022. I think there's a missing point is what we've seen in 2022 is exactly the same kind of waves that any new technology bring in terms of impact on society. So what we saw in the ICO in the phase of building new projects, then that's what happened in 2022 is like the amount of capital that 2021, 2020 had and unleashed an enormous amount of potential in people building some centralized entity and using DeFi to accelerate their economic economic aspect of the type of business they were trying to do in decentralized finance. So my point is, as mentioned before, FTX, but we've seen it before FTX, for example, BitMEX and all these different actors, they use DeFi to use the same kind of mechanism and behaviors that traditional finance had for decades in the industry, meaning leveraging speculative assets and then reborrowing capital on top of the speculative assets. So, and I quite agree again that what's been said in the panel, that it's showing DeFi even stronger than ever than before, but it's difficult for the retail to understand that DeFi is the only piece of software and the only piece of technology so far that hasn't failed. And what has failed is the regulations. And I hope, and I hope that what's going to happen is not what the last person said, that regulation will try to kill everyone innovating in a space. I hope that the failure of FTX will not be used against us again as a concept of failure for the entire community of crypto blockchain. And I hope that regulators and politics, they see this technology as something that can help people back in society and not the opposite.
Thank you, Julien. Thanks a lot. We'll now go move to the next question. So the next subject will be about the centralized exchange and decentralized exchange, overlap on competition, specific value proposition, and new areas exploring for each. The collapse of FTX again raised the question of self-custody and custodial wallets. Of course, financial institutions are only limited to working with centralized exchange like FTX, but the average user to trading crypto is not limited to centralized solutions. Both centralized and decentralized exchange have continued to expand the range of service. For example, decentralized exchange are becoming increasingly intelligent in their order routine on already managing to undercut centralized exchange in terms of cost for some trading pairs. At the same time, centralized exchange are growing increasingly important as most institutional clients demand their product and service serving as a building piece between the traditional finance world on DeFi. So my question are, in which market segment will DEX give centralized exchange major competition? Just add some. And what type of decentralized exchange are there on what are they used for? Like stable constituted liquidity, and which new business area are interesting for centralized exchange? Some of you want to start?
So both like SEX and DEX, like CeFi and DeFi, are both like a major component of the crypto ecosystem. So first, I am convinced that we need both, to be clear. So both are like working towards the same goal, which is like leading the crypto industry forward. But they are doing this through two different ways. So CeFi relies like on security and compliance, and DeFi relies on like smart contracts. But like ironically, like CeFi suffer today from a lack of transparency. So from what we saw with FTX, so the main problem of CeFi is like the lack of transparency. But yeah, all the SEX, all the CeFi answer to this problem. So by publishing a proof of reserve, so what I told just earlier, so everyone like Binance, OKX and Crypto.com, so shows both the cold and the hot wallet to prove that they have enough reserves, they have enough liquidity, because like without liquidity, there is not market, like both in DeFi and in CeFi. So, and we need both, like we need both, because like when there is a crash in CeFi, so there is also like a crash in DeFi, and when there is a crash in DeFi, there is a crash in CeFi. So both areas like super important. They're both like bringing like something to the ecosystem, which is like security compliance or like decentralization, which is also like needed in the ecosystem. And yeah, we will need both, and like about like all the specification on the DEX, so IMM, a custom product, also like I don't remember all the technical specificity, but yes, this is just like some details. So like a DEX is working, like the major technology revolution is like the DEX is working with an IMM and not with like old order book in CeFi or in TradFi. And so yeah, whether like the DEX is implemented with a constant product or with like some like weird mathematical function as a curve. So it's great as it's working.
Thank you, Naomie. Maybe Pierre, you want to?
I will try. When you discover crypto, you discover at first SEX, and after you go to another world, which is DeFi. SEX or CeFi are very important in order to do the bridge between TradFi, your fiat money, and the crypto sphere, the crypto ecosystem. So I think we will have in the future centralized actors and decentralized actors, but there will always be centralized players. In terms of regulation, it's very difficult because you have a technology that is very transparent, that allows us to be fully decentralized. If we want to be fully decentralized, that is a subject for the DeFi ecosystem. But we cannot regulate CeFi like DeFi. It's not possible. And you cannot regulate crypto ecosystem like banking system. And nowadays, when I say FTX is a problem for us, it's because it's give weapon against us to traditional players to say, okay, look, they act like bad actors, and we need to apply the same rules that is doing for banking, for payment, for investment to the ecosystem of crypto. And I think the mistake of Mika is to go further in terms of translation of application of the old system of regulation, compliance system to this new world. And it cannot it cannot apply like this. And I think maybe it's dangerous for us, because the principle of blockchain, it's not the anonymous. It is the transparency. And the problem for blockchain, we will see with ZK rollups and other technology, but it is about the transparency of the system. And we cannot apply the same compliance system like we see with an hosted wallet to blockchain, because it's a lack of privacy, it's a lack of liberty. So we have to innovate on this aspect, and I think DeFi players have to bring their own piece of regulation, of proposition, in order to help regulator that doesn't understand a lot this new system, in order to innovate in terms of regulation. And I think it's very important part of the ecosystem. We do not have to be just a standalone, very on the self. We have to communicate with and educate politicians and regulators in order to not making the same mistake.
Maybe Stéphane, you want to continue?
I can add a word again with through the lens of the jurist. What's funny is that in centralized finance, it's a very old concept that when you give your assets to someone, this person needs to take care of them and then deliver them back to you. This is exactly what happened with FTX, right? People gave assets to FTX and then FTX used them and lost them. So this is centralized finance. It all relies on trust on someone which is holding your assets. And this is what's new to us, even as jurists, as lawyers, is that with DeFi, there is no one that you can held accountable, right? There's been many hacks of DeFi protocols. I think Julien can witness that. And there is no one to be held accountable for that. So what's fun is that it's all about how well is the code written, how well is the code prepared and developed. So when we think about regulating DeFi, there are many people thinking about it right now. They don't even know how to take the thing, from which angle to take it, to regulate it, because there is no one to be regulated. It's only softwares running permissionlessly and autonomously, and sometimes with no central counterparty. So this is all the difficulties we're facing, we as jurists, when we think about those new systems and new architectures.
Thanks, Stéphane. Julien, if you have any word.
Yeah, if I get back to the questions, what would be the major change inside DeFi in order to make a huge competition for centralized exchanges? I think it's a matter of finding the right features for this new type of technology in terms of scalability and anonymity and security, in the sense of, now that we have blockchain that can scale, we're building scalability inside those different type of protocols. We can actually think about having high frequency trading or different type of derivatives, such as options, futures, and building on top of those different protocols, different type of strategies. So at the moment, the reason why people were going into FTX or BitMEX back in the days, the main reason is because they were the best. They were providing products that DeFi is not able to provide, meaning that those type of instant swaps, those type of the derivative products. So we now criticize and do back trading about FTX, but FTX was the major platform for professional traders. I was using FTX and I was very happy about the technology that was powering FTX, and people tend to forget that what FTX was able to provide to the market was pretty crazy in terms of technology. Then in terms of criminal activities, this is another side of the story. Using funds and capital from users in order to then unleash the potential in Alameda Research to be able to arbitrage and do all type of activity in DeFi, which I'm not super happy, because we were competing against Alameda Research, and now I understand why we were always losing. So the point is now that we are updating the technology, and the technology is becoming more mature, and also we can actually use those pillars to make those new type of exotic product on top. Normally, there will be no reason to go into centralized exchanges except only one, which is the user experience and the user interface. And at the moment, this is one of the major centralized exchange that is winning this race is Binance. Binance is not providing any type of insurance over the user money. They're now creating this new type of treasury proof, or I don't even know what they call it. But treasury proof is kind of like a smoky smug, where they say, okay, look, this is the money, but actually we don't know if this money is being used outside or leverage or whatever. So it's still like, if you look at the accountability and the aspect of accountability, this is just nuts. This doesn't mean anything. So at the moment, the reason why people use Binance because it's so easy to use. Let's call a rat in a DeFi. DeFi is complex. DeFi is only answer 1% of people that are in blockchain and crypto. So if we resolve the problem of usability, user interface, and then we use the scalability features in order to provide aspect of finance that we like to use, for example, us, professional traders or hedge fund, then there is no point of using centralized exchanges. So, but again, and it was also a good point from the panel, there will always, and we need to work together, there will always be some centralized products and need to be there because we need to protect users. Unless we have insurance and regulators jumping into DeFi and providing insurance products for if something happened to a smart contract or if there's a hack on a front end of a product, then of course for users, they should be using both of them. If you put your eggs in the same basket of DeFi and Tele, there's a risk. If you do the opposite, there's a risk. So it's always about measuring the risk and understanding the pro and the cons of such a technology and verify, don't trust, right?
Thanks, Julien.
So very interesting discussion, and that's a great transition to the next question that we will ask to Naomie. So talking about the barrier to mass adoption. So when we organize webinars at HEC, Blockchain HEC, and when we do a webinar on DeFi, things get very complex very easily, and so we lose the audience. And so Julien, you said you talked a bit about risks, and my question is, can data help maybe to measure the risk, or can data help to help bringing mass adoption to the DeFi, CeFi, and things like this?
Yeah, so talking about the risk, so talking about the data, the mass adoption, so we can prevent the risk. So with data, because like the industry has to be more data driven. Today, like the industry is dashboard driven. Like if you are a little bit into DeFi, so you sure know like DeFi Llama, like which is like the DeFi Pulse, or like every like this thing, like every analytics right now in the DeFi space are like through dashboard, and so there is a lack of like real data, like real like API data, which is like really different from a dashboard because it's like more accurate. So like the recent crisis, like for example, like the crisis with Terra. So if we have been looking at the data like just few days before, like 4 days before the crisis like spread on CeFi, so we could have prevented it. And so Kaiko, like the firm where I'm working right now, so they prove that just like we weren't looking at the right data at the right moment, because like the liquidity wasn't here since like a long time. And and we weren't looking at the right data at the right time. The same thing at Curve. I don't know if you heard about like the Curve AV thing that happened like last week. So there was like a market manipulation from a famous crypto trader named like Abraham Eisenberg. And so it was a market manipulation like on Curve. And but unfortunately for him, it happened at the same time that Curve released their white paper. So every eyes was on Curve at the same time that the trader were doing like this market manipulation, which is like a lending borrowing, like an easy market manipulation, like of like 10 millions. So yeah, so the Twitter space like saw the market manipulation because every eyes was on Curve. And so all the, like, there was like not a revolution of Twitter, but like they all like went against this trader, and they all like I don't know what to say, but like redo the market manipulation. So so fortunately for Curve, for Aave also, so there wasn't market manipulation at the end, thanks to the Twitter sphere. But we can't just wait to some like tweetos to read the data. So we have to read the data more. And yeah, about the risk. So what Julien, what you talk about, like risk in DeFi, risk in CeFi. So yeah, I 100% agree, 100% agree. And I think like we have to educate everyone with on risk. We have to educate everyone on risk on CeFi and on DeFi. So with like the Women in Web3 Association, so we are doing that, like we are educating. We did like a partnership with Conhouse when we educate on the risk on CeFi, which is like having an internet hygiene, like don't talk to stranger on Discord, don't give your private key to someone, don't, I don't know, like don't click anywhere, anytime. So this is like the main risk on CeFi. And on DeFi, we also like did a panel on risk on DeFi with Morpho, as I think you're doing the same with blockchain HEC, and we talk more about like market manipulation. So the thing I just like explained to you with Aave, Curve, and Avraham Eisenberg. We also talk about liquidity manipulation, because like yeah, all the CeFi and all the DeFi also like worse ways if there is really liquidity in the protocol. So when it happens that Terra has no liquidity, so Terra crash. So yeah, so we are preventing again against DeFi, CeFi risk, and we need like to educate. So it's really great like that you are doing like a webinar on DeFi, and you're preventing against risk also.
Thanks a lot. So the next question will be to every one of you, and we will start with Julien. So the question is about the future of DeFi. I think that topic may inspire you, and the transformation from classic traditional financial institution, and how can they leverage, you know, the DeFi, CeFi space to transform from traditional finance to decentralized finance, and how can they seize the opportunity to develop future crypto business on what's going on at the moment, and how can DeFi answer their institutional needs?
Explain a few different stories that are currently happening in the concept or the project Curve, for example. But I believe it's like crypto blockchain, or I would say like internet today. We all using internet without necessarily understanding the different protocols, because in internet you also have protocols. People don't tend to understand those things, but HTTP, SMTP, and all these different protocols are the protocols that are powering internet. And the reason why we are able to use WhatsApp, or today we're calling each other on a video, having panels, is because of those different protocols. So blockchain and crypto will be used by those different applications by retail or other institutions without necessarily understanding that they are being powered by those different technologies. So at some point, we'll be able to use the technology without saying, okay, this is using blockchain, this is using crypto. In decentralized finance, I think it's the same. At some point, decentralized finance will merge with centralized finance. And today, it's really clear that those centralized entities, those centralized financial institutions, by not using decentralized financial products, they are losing money, they are losing market shares, and they're also losing opportunities. So for example, in Curve, you can make, using some virtual pool with the help of synthetics, you can make a swap of 80 or 90 or 100 million US dollars from euro to dollars in less than 6 minutes. This type of things will take financial institutions about 3 or 4 different months, because you will need to do like multi-collateral party, sign documents, have different law firms, and it takes time, and you also involve multiple different banking institutions. In Curve, you can do it in less than 6 minutes. So what's happening today is like we have banking industry, 3 major banks in the world that are talking with us in Curve that want to create a pool of liquidity for them to be able to use and exchange different assets in almost atomic behaviors. This is what Hervé has initiated about 2 years, a year and a half ago. We also stake capital liquidator on Aave Arc, where they provide and they receive funds from financial institutions, and those people can actually exchange money between each other because it's KYC and AML. So there's no risk of not understanding where the money comes from. But right now in the Curve ecosystem, because we don't have this concept of isolations of funds, we now seeing those banks that are willing to use those pools in order for them to exchange worldwide. So my point, what I want to say is, financial institutions, different centralized products or applications are starting to use DeFi without telling their retail user that they are using it. Because at the end, for example, we saw a couple of months ago and also a couple of weeks ago that Société Générale emit another bonds initiative. We also have Goldman Sachs that now is trying to do stuff with Ethereum blockchain and exchanging, and they exchange a couple of millions. And they plan to exchange a couple of billions, some banking. So now they are starting to use, but at the end, the retail that is using the bank or having access to some wealth management strategies, it doesn't actually know this is actually using crypto behind the scene. They're using stablecoin. At some point, I think centralized entity and financial banking, they will say that stablecoin aren't crypto for the retail users. This is where we are moving. We are moving into different worlds, where crypto and blockchain were fraud and scams, to now blockchain is a revolution, Bitcoin is still a fraud or not actually will disappear according to the European Commission recently paper that they released. But now what they're doing, they're actually using the technology. Visa, TransferWise, all those different actors that are moving billions of US dollars per day, they're now looking into the technology to what? To solve the existing problems. So not to create solution and solve problem. They have huge amount of problem running the infrastructure, being able to exchange worldwide without trust parties. And this is exactly what they are doing at the moment. They're jumping into the technology, using the technology without telling their end user they are using the technology. Because what? Because they don't actually need to. Because at the end, they actually see this as a technology, and it should be seen as a technology. So DeFi will be merged into CeFi without the end user realizing that this is happening.
So DeFi will merge into CeFi, and so do you share the same vision, Stéphane?
I totally agree with what Julien said. What we are witnessing now is literally the creation of bridges between TradFi and DeFi. I will give just 2 examples. The first, which is actually quite old now, but is the proposal from Société Générale to put a tokenized bond to make a DAO to leverage it as a collateral. So we can see that TradFi is trying to use the tools of DeFi to create new value and use it as a collateral. And on the other way, we see decentralized entities, just MakerDAO, proposing to the community to put the reserves, part of the reserves, into bonds from the US government to create more yield. So again, it goes the other way around. So it's literally the creation of bridges between TradFi and DeFi. And I think this is a movement that will continue and that we will observe and see. And from, again, with the legal eyes, it's always funny to see traditional investment products or securities going into decentralized protocols and see how the regulators will tackle this. But I agree. I think this is what we are, what we'll witness.
So thanks. Maybe Pierre or Naomie.
Yeah, just a little word. I'm fully agree with that. I think DeFi ecosystem has to work on the user experience. It's too complicated, and sometimes I think it's complicated because they want to be complicated. When I see some interface, some UI, UX. I think you can do better in order to democratize a DeFi ecosystem. I think the first one, we need some neutrality. DeFi ecosystem is backed by fiat assets indirectly. And if there is a crash on some of the asset, I think Circle, USDT, etc., all the DeFi ecosystem is based on this asset. So there is a problem of neutrality. And we see with FTX, if FTX decide to bring their own stablecoin, the damage will be huge, or will be used on the ecosystem. And the two last point, I think DeFi has to be more decentralized. DeFi players, DeFi builders has to improve their real decentralization, not to have their own multi-sig and just keep the power. And for that, they have to improve the governance and try to make better governance, because right now, DAO doesn't work very efficiently. We see with Maker, there is some huge debate, and we have to improve the DAO governance. And to finish, I think we have to work on sustainable tokenomics. We have seen that 2020 has a lot of projects with not sustainable tokenomics, and I think the future of DeFi is about tokenomics, because it's very important. Tokenomics are not just a way to split and distribute the cash flow. I think tokenomics are a new way in order to better redistribute the value of this old protocol in order to decentralize and to be fair. So I think with this 4 points, we will arrive to have a better DeFi.
Okay, very interesting. And so Naomie, you want to share a word on this traditional finance going into decentralized finance?
Yeah. So I agree, like, of what you say about like DeFi should be like more user experience friendly, more tokenomics friendly, more like everything friendly to be accepted by institutional. But I'm also convinced that institutional should innovate, and for that they should look at DeFi, because like what DeFi is doing is not like far that what like traditional financing is doing. Like in DeFi you have like lending, borrowing, you have exchange. If you take the core concept of blockchain, which is like Bitcoin, what is Bitcoin? It's just like a transfer of ownership from someone to someone else. And it's exactly what the traditional bank system is doing, like transferring money from someone to someone else. So yeah, so the financial system have to innovate. They innovate like since 40 or 50 years with the starting of internet. Now you can trade with bots. Really recently, with the emergence of AI, you can trade with AI, and also should look at what blockchain could bring to continue this innovation, because like blockchain is just a smart contract, so just like a code you execute to do what you say, like super briefly. And so if you think about it, like any financial contract can be turned into code. So yeah, so DeFi have to be accepted by TradFi, but TradFi have to innovate, because like internet is not enough.
Okay, thanks a lot. So we have many more questions, but we are running out of time. Maybe one or two questions from the audience, if you want to shoot a question at the panelists.
Hello. I just wanted to have a view from the panelists on what the space is going to be for public protocols in finance versus private protocols, because I think that it's a subject that is pretty dear to the people in traditional finance.
Well, I think they have tried multiple times. Goldman Sachs and for example, also IBM. They have spent an enormous amount of capital and resources in order to build some private initiative. I wouldn't say this has been successful so far. One of the major banks in the US, they have partnered with Consensus in order to build a private blockchain. I would say that those initiatives or those institutions building and trying to use private blockchain could actually be a good idea for their internal use, but as soon as they want to be actively looking for liquidity and best slippage or quotes, they wouldn't be able to do that without by ignoring decentralized finance or ignoring the protocol that is giving access to all those different enormous amount of tools and opportunities in, for example, Ethereum blockchain. So it will be very, very, very difficult for those guys to operate a private blockchain without using open source decentralized protocol. It's like today saying that you want those people to provide a web page for the user, so the user base of people accessing the bank, without using the protocol of HTTP, but using their own protocol. I think that will be very difficult for them. They could still lobby and force people to use their system and pay enormous amount of fees or whatsoever. But at the end, if the protocol is completely open source and distributed, you will have those guys. There's no point. I mean, I don't see any point for those guys to not build and use something that is being used by everyone. You can still use something on top that provides some backdoor or gates or 100% control of the files on top of the existing protocol. This is exactly what we have in the internet. You have people building Uber, BlaBlaCar, all type of different application on HTTP, on an existing protocol, but then they do whatever they want on the other side. But the moment the protocol is becoming so strong that for them not to lose money and attract new markets, they will need to be able to use it. Otherwise, it's not possible to scale and sustain their business.
Okay, thanks. Thank you, Julien. So it's almost an hour. I see David telling me that we are running out of time. So thanks a lot to the panelists. I think we can run a big round of applause. And there is much more to come on the next round table.
Ciao, ciao.